basically Bitcoin, for the most part in its history, has behaved like a risk-on asset. And so when there's liquidity in the system, when stocks are doing well, generally Bitcoin is doing even better. Now, because it's a smaller asset and because it's only a 12-year-old asset, it's been heavily correlated to its own adoption cycle, right? So kind of like how, say in its early days, Google could be immune to the economic cycle because no matter what the economy was doing, Google was growing its market share. And still is in large part. And so Bitcoin's been like that for a while where, Bitcoin's growing, but the price can obviously fluctuate substantially based on if there's a liquidity event, right? So if the dollar spikes, if liquidity gets tight, Bitcoin is likely to sell off. On the other hand, if liquidity is very abundant, then Bitcoin can do very well. And of course, when Bitcoin is doing well, people want to go out on the risk curve and buy silly coins. And those kind of temporarily outperform Bitcoin, but then when the music stops and there's less liquidity and everything kind of corrects, those things go down a lot more and tend not to hold their value over multiple cycles. And so basically, Bitcoin's benefiting from the long-term adoption cycle while still being generally a risk-on, liquidity-driven asset that is prone to sell-offs when it's not going in this direction. Another thing that I think is really kind of understated over the past few months is how important grayscale has been for Bitcoin's price action in the tactical sense. And so, for example, the second half of last year, grayscale was by far the biggest buyer of Bitcoin. And so some of that was natural demand, but another part of it was that arbitrage trade, right? So grayscale had a premium over NAV, and investors could buy that. They could buy in at NAV, so they could create new units of it, and then they could short Bitcoin elsewhere. And so basically that served as this program that kind of kept converting liquid Bitcoins into illiquid Bitcoins. And so even when that trade ended every 6 months, those Bitcoin would stay in there and just be permanently illiquid now. And then traders could go and do it again and put another batch of Bitcoin in there. But because we've had a rise in competition, right? So we have a Canadian Bitcoin ETF, we have other ways to access Bitcoin. Exchanges have gotten more and more usable. We have all sorts of ways to access Bitcoin now for institutions and individuals. So that Grayscale Bitcoin Trust went to having a discount to NAV, and so that kind of closed that very aggressive kind of neutral risk-free arbitrage trade. And so Grayscale's no longer been a buyer of Bitcoin like they were, and so essentially the biggest buyer went away. As we started to see Bitcoin consolidating and kind of not really making higher highs, and then when you get the Elon FUD, when you get all the other FUD, now we have kind of China hash rate moving around, and so we're seeing kind of a period of Bitcoin weakness. And I think in some ways this was due, given how much euphoria there was in things like Dogecoin, things like Ethereum Classic, or things like like basically every token under the sun was having this crazy vertical price action in 2021. And so now reality is kind of setting in. Some of these tokens are crashing. Bitcoin that actually has the fundamentals is correcting, but it's holding up better than those meme tokens and things like that. And so overall, I don't have a firm, say, 3 to 6 month outlook. I'm kind of watching certain risk levels, right? So I was kind of watching to see if it breaks. We started to have some rising action in recent weeks. So I was trying to see if it would break over, say, 41, 42,000. So far, it's kind of gone the other direction, kind of settled in the lower 30s for now. And so I don't have kind of a near-term price action, but overall, what I'm doing is kind of watching the fundamentals of the space. So watching development continue to happen on the Lightning Network, watching what's happening with, say, El Salvador, watching what's happening with some of the layer 3 now stuff that's out, watching what's happening with this Bitcoin mining migration that's potentially underway here. And so I think it's a kind of a time to focus on the fundamentals and make sure they remain favorable. Whereas the price action, I think, has it definitely has to start it has to start proving itself to the upside in order to kind of regain that momentum. Right now, it's kind of in that big consolidatory phase.
I'm interested in your take on what's different this time with China's sort of anti-Bitcoin, anti-crypto actions, how much you think it has to do with their CBDC, and just in general, how much you're watching what's going on with China CBDC, digital dollar, and that sort of emerging topic of conversation.
Yeah, so there are certainly people more than me, better than me, that follow Chinese law closer than I do and kind of understand the nuances more than I do. My interpretation from people that are more knowledgeable than me on the space, is that this one came from, the premier. It came from a higher source, and so this one has so far held more weight than previous, quote unquote China bans for mining. And so this one, as far as I can tell, seems to be actually resulting in hash rate shifting, which I think is in the long run is good. It's probably not ideal to have estimates of over 50% of a hash rate in any one country, right? You want it to be as decentralized as possible. At the very least, it takes away one of the narratives that bears would have for the network, that China somehow controls it. It's much harder to make that argument if they have 40% or less of the hash rate there, right? Or even, if it goes down much lower than that, it's even better. And so there's that kind of characteristic. Now, China, there's a couple factors at play. One is, they I think they are somewhat concerned about, say, commodity inflation and some of the issues there, right? So, but I think that's the smaller factor. I think the bigger factor is that they are pretty far along here on their central bank digital currency, and they don't really want to have competitors to that, and they want to have that kind of be as much used as possible in the years ahead. And so they'd rather have that surveillance token, that programmable token, rather than a decentralized token. And in some ways it makes sense, because for example, China wants to go around the dollar-based system. They want to be able to buy commodities without having to rely on dollars. And so we've been in this kind of weird situation for a while, where structurally for decades, the dollar's been the only currency worldwide that you can buy oil in, and to a lesser extent, it's mostly the only currency you can use to buy commodities in general. And for a while, that sort of made sense. I mean, the United States was the biggest commodity importer, but once China surpassed the United States and became the biggest commodity importer, it's awkward that they're using this other currency to buy their own commodities, when in many times, they were the biggest customer of whatever entity they were doing business with. And so they have a pretty strong incentive to want to be able to have a currency that is more efficient and can form their own routes, rather than be reliant on another country that could sanction them, that could cut off their circulation to access those payment channels. And so that part makes sense. The part, of course, that people that value freedom are I think rightly concerned about is that all the other attributes that comes with that currency, right? So the ability to surveil it, the ability to shut off someone's access to it if for whatever reason they're not on the right side of the government, the ability to automatically deduct money from it, for example, like automatic taxation or automatic fines or things like that. And so, yeah, I do think that's a pretty big factor. And I think it's sometimes it's hard to read exactly what Chinese officials are thinking. And so again, I'm not the most optimal person to kind of give insights onto what China is thinking at any one time. There are people much closer to source, or that devote more of their time to following that market than I do.